Ujjivan Financial, the counter has been in focus on back of its September quarter earnings, which were pretty much in line with what the street was estimating. But the company's asset quality has improved sequentially, so that's one good news. To discuss the quarter gone by, joining us now is Sudha Suresh, MD and CEO of the company. And we're also joined by Shraddha Babla from our research team, who tracks this space pretty closely. Over to you, Shraddha.
Right. Thank you, Ms. Sudha, for joining us on BloombergQuint. Just wanted to understand what has caused the sequential improvement in the gross NPA number and what is it likely to look like by the end of March 18?
I think a lot of efforts have been taken by the credit collection team in order to improve the situation, which has been caused predominantly because of the demonetization. Overall, in the last 6 months, I think we have a credit collection team which has put massive efforts with a planned credit program for looking at the overdue collections, and that has also been split into buckets so that we have focus on the buckets which are greater than 90 days. Overall, I think the collection team have put up a good performance, whereby we have seen on the way they are on a complete turnaround. We looked at assets which predominantly could be loss assets, and then we made a significant provision for that in the first quarter, which is almost about 159 crores. Further, we looked at those of them who were provided and we didn't have any recoveries in Q2. We also did a prudential write-off of that of about 88 crores. So overall, I think what we are looking at is that the credit costs have halved in this quarter, and overall the performance is such that the PAR has reduced from 8.8% to 6.7%. Not only that, in terms of a fresh disbursement from January to September, that continues to show a very impressive collection efficiency of 99.7%, which is more or less the same, in the microfinance sector, on normal mode.
If you could also tell us how the recovery trends have been in the two important states of Karnataka and Maharashtra, and if you've started disbursements again there?
So we have, pockets where in Karnataka and Maharashtra where we are largely unaffected and where the business is good and the branches, PAR are minimal or normal, and there we continue to do our business. Wherever the branches in Maharashtra and Karnataka are affected, we are looking at the position on a branch-by-branch, case, and we are accordingly extending our credit. Beyond that, we are also focused on the OD collections in these branches, which has been showing good traction, and hopefully we will see, the PAR tapering off in these states also.
Okay, when do you think Ujjivan can get back to reporting a positive quarterly profit number?
So we do hope and look for the Q3 being on a standalone, definitely a profitable quarter.
And if you could talk about your branch rollout plans and the kind of deposit base that you target to accumulate by the end of the current financial year?
The branch rollout plan is as per our strategy, where we have looked at rolling out totally about 160 branches and converting them as bank branches basically. We have already 100 on the milestone, achieved by October, and we will complete the rest within the next 2 quarters, maybe, even early fourth quarter, we would have completed the whole branch rollout. Similarly, the other set of branches will be rolled out in the next fiscal year. And we have maintained our progress as per our plan in our transformation in terms of the branch rollout strategy. On the deposit side, I think we have now touched about 1,349 crores on the deposit base, and we have also, done impressively in terms of diversifying our funding sources, whereby we have raised certificate of deposits post the scheduled bank status. So I think overall we are seeing fairly good response, and liquidity both in terms of the institutional deposits as well as the retail liability build-up should happen, fairly well in the next 2 quarters.
All right, appreciate you joining us and speaking with us at BloombergQuint.